Hello and welcome to another video on my YouTube channel. My name is Joris and today I am here with a video about the European UCITS ETFs. So ETFs that invest towards the European continent, and I'm going to compare the biggest ETF versus the cheapest ETF. And why the biggest versus the cheapest one? Well, I already mentioned in my previous video in which I talked about the biggest global UCITS ETF compared to the cheapest global UCITS ETF that I'm always annoyed when I read that an ETF should at least have 100 million invested in it. Sometimes it's even 200 millions invested in it before you should consider investing towards an ETF. I don't believe that's true. I believe that when a new ETF is started and it is way cheaper than the old one and it follows more or less the same index as the more expensive ETF that you are investing in towards now, that you should start investing in the new cheaper one. Unfortunately, a lot of people start to invest in one ETF and then they never change to the cheaper option. I'm not that kind of guy. When I will see a cheaper option appear that invests towards the same index or more or less the same index, I'm going to change. And that doesn't mean that I'm going to sell my old ETFs that I already bought from the old ETF. No, I'm just going to start investing towards a new one and stop my regular investments into the other one. And of course, when an ETF is bigger, this can have scale effects. So when the market goes down and there flows more money towards that ETF is going to perform better, of course, because they are buying more stocks at a cheaper price. But it can be that the investors, because they are already older and are investing longer into the ETF, that they start de-investing towards that ETF, and when the market goes down, that they more or less panic a bit and that there is more outflow out of that ETF. That can be the case as well. So it's not straightforward, but scale effects do exist. So do your own due diligence. It's not financial advice what I'm giving. It's just my observations for entertainment only. So European ETFs, for European investors, you know that I always say the same thing. European investors should invest more towards Europe. It's like Trump that he wants to make America great again. Well, I want to make Europe great again. All that money that flows from Europe to the US, it's incredible. We should invest more towards European countries, European companies. And in the past year, it's changing a bit the trend. So global ETFs and European ETFs are receiving more money. But of course, global ETFs most of the time it's 37 up to 67, 70% of the money flowing towards global ETFs is also flowing towards the US. So in that regard, I believe that European ETFs should receive more money from European investors, because that money truly flows towards our European companies. And you have many different European indexes. You have the Eurostoxx 600, you have the Eurostoxx 50. Some indexes focuses on the European continent, others on the EU, and others even on the Eurozone. You can also watch one of my videos, the Eurostoxx 50 or Stocks Europe 50 ETFs, and I will put the link down in the description below. So after you have finished this video, you can go and check that video out if you want to. And yeah, ExtraETF, I'm going to go back to that website because it's a very good website. Some numbers aren't correct. Sometimes it's also a bit strange how they go from their numbers. Then they say, for example, you have 360 ETFs in that category, and then you go and see to the dividend distributions over physical and synthetical, and instead of those numbers adding up to 360, it's only 350. I believe that's because sometimes one ETF can have a notation in Swiss francs and in euro, but still it's a bit annoying that numbers don't match up. Even the total capitalizations, sometimes the total expense ratios don't actually are correct. So you have to always check what you see on ExtraETF, but 99% of the information that you find on ExtraETF is correct. So in that regard, I think it's a very good website which gives a really quick overview of what you want to see. And let's have a look for the European dividend UCITS ETFs. So it's a bit complicated. So when you start, you're always starting from this website. From this site, you go to search, ETF search, and then you have this page for the Swiss inhabitants. So all the products are 3,290, and here Suchergebnisse, so the search results are 3,269. That's what I mean. The numbers don't match up. It's really annoying. But you have to go to Aktien, so shares, region. You have to click Europe, and you can also choose Europe 6 or Eurozone. So you have the different options. You can always click everything. Then you have to go to, are they paying a dividend, yes or no? So yes, I want to have dividend paying stocks or ETFs. Replication, I want physical ones, so the sampling types or the full replication ones. And then you have this list, but as you can see here, UK equity, and I think somewhere you will have other countries as well. So what you have to do is country. So you have Gross Britannia, so the UK, and now the Swiss isn't there. So now you have to pay on. You have to click without other countries. So Swiss Canto, it's always the same. The top one, it's an ad, so that one is advice to you, but you shouldn't look at that. You always have to look at the first one below that, and then you go to volume, and the biggest one is the iShares Score MSCI Europe UCITS ETF with 8,392,000,000 Swiss francs invested into it. It's 0.12 total expense ratio, so that's not the most expensive one. You have the stocks Europe 600 banks, but banks is of course directed towards the sector of the banks. So if you want to invest into banks, I invested in ENG, but I always said when I was discussing the bank sector stocks that it's better to invest towards an ETF that immediately invests towards all the banks in Europe. So this one is a good for that one, but I don't advise when you want to invest in Europe to take this one. Always take the MSCI Europe, the 600, or the MSCI Europe, the FTSE, Developed Europe UCITS ETF. So all those indexes are good. Don't go into specific sectors if you want to invest towards Europe. But that one is 0.47. The other one here with constructions and materials, it's 0.46%. So now I'm going to discuss in this video the iShares Score MSCI Europe UCITS ETF with 0.12%. And if you look at the total expense ratio, so you also have the WisdomTree Europe Equity UCITS ETF, USD hedged, so not that great as well. But I have to click it once again, and then you have the cheapest one, and it's Amundi Prime Europe UCITS ETF. And if you remember from my previous video, the global one, there the Amundi Prime All World UCITS ETF was depicted as the cheapest one. Unfortunately, this one isn't available in Switzerland, so it's actually a mistake of ExtraETF to put it on the side of Swiss inhabitants, because that one doesn't exist. You can't invest in Switzerland on the SIX stock exchange into this one. Of course, you can buy it on the Xetra or the GetX and still have it in your portfolio here in Switzerland. But it's yeah, it's a bit annoying that it's not available on the SIX stock exchange. But I really like this ETF, and it only has a total expense ratio of 0.05, so a little bit less than the 0.12% of the iShares ETF. Actually, it's more than half of the total expense ratio of the iShares ETF. So I believe iShares should do, or BlackRock should do an effort and reduce the total expense ratio on their ETF. And you will see immediately why, because when you look at how the IMEU, so the iShares Core MSCI Europe UCITS ETF, is performing. So here you have the easing code and the total expense ratio. On the SIX, you can buy it in Swiss francs for 32.08 Swiss francs. And the dividend is distributed in euro. So you have 415 companies in this ETF, and there is 8.37 billion invested into this ETF, fully replicated type. And here you always have the performance in euro and the performance in Swiss francs. So especially here, you can see that the Swiss franc is actually gaining in value compared to the euro. And yeah, when you invested from the beginning in this ETF in euros, actually the performance isn't that great for Swiss investors. But in fact, yeah, for Europeans, 120.59% gain, that's not bad at all. Over the past 5 years, it is up 90.36%. Over the past 3 years, 36.46%. And the past year, it is up 6%. It pays out 4 dividends per year in February, May, August, and November. And the dividend yield is 2.65%. And here you can see the dividend distributions. So not bad at all. Only in February it's a bit lower, and in November as well, but for the rest it's a really nice dividend. 2.65% isn't bad at all. So it's not a high dividend yielding ETF, it's a normal dividend yield for European companies. So really good ETF. But the PR1E, you also have the PREE and the ETF EU as ticker symbols for this ETF, the Amundi Prime Europe UCITS ETF. It's a Luxembourg-based ETF, so the other one was based in Ireland, and the total expense ratio is only 0.05%. And this one isn't following the MSCI index like this one, so the MSCI Europe is tracking the MSCI Europe index, but this one is, once again, Amundi Prime always works with selective GBS indexes. So this one is following the selective GBS Developed Markets Europe Large and Mid Cap Index. So you can buy it on the Xetra or GetX in euro for 31.14 euros right now, and the dividend is paid out in euros as well. It contains 6 companies more than the other ETF that we discussed, and there is only 87 million invested towards this ETF. So this is what I mean. It's a really small ETF, less than 100 million. So a lot of people will just don't look at it. But look at this performance. It's 1 year 6.94%, 3 years 37.96%, 5 years 92.39%, and since its inception it is up 73.78%. It only pays out one dividend per year. That's what you often see with Amundi, that they only pay out one dividend in the year. So it's in December and the dividend yield is 2.60%. It's 0.81 euros that you receive on the 10th of December of 2024. So I had a typo there, but I corrected it. So sorry for that, but now it's correct. And yeah, dividend yield of 2.60%. Once again, normal yield for European companies. So nothing wrong with that. If people say that it's way too high, that's not true at all. 2.60% is completely normal here in Europe. Then the top 10 holdings. When you look at the top 10 holdings, you see all the same names appearing. It's just the percentages that are a little bit different. The PR1E ETF, so the one from Amundi, has a little bit more in the top 10 of its holdings. So only 0.30% more, but it's actually really small differences. So here you can see the biggest difference is Shell is here the 9th company and Shell is here the 7th company. So all the rest, it's only one position difference. So it's actually more or less the same index that it is following. Also the countries, when you look at that, France, Switzerland, so they switch places. And for the rest, it's more or less the same. Spain and Italy also switch places, but it's minimal differences. Also the sectors, there you can see consumer staples switch places with consumer discretionary, and the last one, telecommunication, you don't see on the PR1E because there you see utilities. But for the rest, yeah, it's like watching an image. If I put a mirror here, it's you would say there was only a small speckle in the mirror, because it's more or less the same. The performance since the inception of the IMEU ETF from iShares. So you see, in the beginning there was a tough period because yeah, it started in 2007, so you have the financial crisis happening here. So it was off to a bad start here, but then thereafter it recuperated, and yeah, now it's well in the green. Also the PREE, so that one, it was off to a good start, but then COVID happened, and so it was also in the reds in the beginning of its career, and now it's also well in the green. The best comparison is, of course, when you start the two ETFs off from the same time. So when the PR1E started, I also compared the IMEU, and you see that they are like practically on top of each other. So you can't you can you can't hardly see the Amundi Prime Europe ETF, because it's completely covered by the blue line from the iShares Core MSCI Europe UCITS ETF. So you have 73.78% gain compared to 72.41% gain. So this difference, you can say that it's only due to the fact that PR1E ETF is a little bit cheaper than the IMEU ETF from iShares. So that is also my conclusions. The difference is actually minimal, but PR1E is proving its worth. And if you don't mind the one dividend per year, PR1E is definitely a good choice. But you know me, I like quarterly paying dividend ETFs. So for me, IMEU is still one on the top of my list to buy, even though it's more expensive. and it's also available on the SIX stock exchange, which is also an advantage for me. So Amundi, when you are listening to this, please make this one available on the SIX stock exchange as well. Then I would actually prefer the PR1E. But as always, do your own due diligence and decide wisely in which ETF you want to put your money towards. Because as you saw, there were a lot of ETFs available that put their money towards the European markets. So you can check them all out, use the ExtraETF website and the Just ETF website as well, because as you saw here, all those graphs are from the website of Just ETF. So with that being said, thank you for watching to this one. Please consider subscribing to my YouTube channel. Hitting that like button helps out the channel enormously as well. And with that being said, thank you for watching to this one and see you on the next one on my YouTube channel. Bye.